In this video, we're going to talk about Tesla and how you can use the Tier 1, Tier 2, and Tier 3 charts to understand where Tesla's price action could be going next. It's all about stacking probabilities and also knowing where the true structure is inside the market. There are always many levels of support and resistance inside chart structure. Our community is all about learning. I seek to equip you with the skills that you can apply for a lifetime to become more of a financial and emotional blessing to yourself and those you love, and becoming the best version of yourself during that process. Let's run the numbers. The CTKS method is the world's most powerful smart money buy and sell level detection system. The buy levels, called SLs or Stanfield levels, help you to know where you can lean in, and the sell levels, also called Stanfield levels, help you to see where you can lean out of a trade or investment. I'm just going to pop on the SLs for Tesla. One thing with the CTKS method, it's marked up here in Tesla's case since 2010. This is not recent indicative price. These SLs all have different weights. You can see there's some skinny ones and there's some fatter ones, more heavy in the weight. What you will see when the heavier lines cluster together, that forms a strong magnetic barrier. And the word magnetic is really important because price becomes magnetized. And you can see between this particular area on Tesla, that 233.12 mark, and just up a little bit further at the 233.58, price came down, couldn't get to this lower SL. This lower one, when price is just here, is called a support line, and that was at 228.57. It got magnetized back into this 233 area. Couldn't get above this smart money sell area at 236. What happened? If it can't go above, it goes below. And approximately that 233 area was hit. Of course, price went a little bit further down, but what do we see? This low is not the same as this low. That's a low, but that low is actually higher. That's a higher low. And that means that the buyers are stepping in to defend this particular SL all the way down at 228. That means there's a potential or a probability that will come up and re-challenge this 233 area and may even get to up here to the 236 area. One thing that we know, price is always moving SL to SL, Stanfield level to Stanfield level. And you see these SLs through the CTKS method. We saw this 236 level being breached, and what do we see here? Price is seeking to get above this smart money sell area at around that 239, but it's not having much success. It's tried and tried and tried and tried and tried. Wow, Tesla's really trying. You can see that 239 area is a very important area to breach. If we breach here, we're going up to the next SL. If we don't, we're coming down to the one below it. Price is very easy to understand when you just think price is always moving SL to SL. And if you would like this Tesla indicator, just pop across to ctksmethod.org. As a professional, you know if you're trading and investing in Tesla, you can't just look at Tesla's chart. You have to look at other charts to figure out where Tesla might be going. This is a very unusual concept to people who are fresh into financial markets. But for people who have been inside financial markets for many decades, this is the first thing that they would do. Tesla is actually traded on the NASDAQ. So to look at the NASDAQ is to look at Tesla. This may not make a lot of sense if you're new to trading and investing, but if you've been around for decades, you know it's the fact. This is why we need to zoom in and look at the NASDAQ, especially the SLs or Stanfield levels on the NASDAQ. Through the CTKS method, the NASDAQ is marked up since 1973. What can we see here? A very strong sell level. This is a structural sell level at 13,623. This particular level, you can notice that Tesla was coming up to a level, bumping up against it all the time. And what do we see here? The Nasdaq is bumping up a smart money sell level, and it's quite strong. Professional investors and traders are deeply into overlays, and overlays should become part of your normal assessment method. When we look at the Nasdaq and we throw the indicator on, we can see that that smart money sell level is restricting the Nasdaq from going higher. The good news is that we breached this 13,588 mark. That's very, very good news, but we got stopped by the 13,623. What is this white line? You got it. That's Tesla. What is Tesla showing? Tesla reacts very substantially to movements in the Nasdaq. If the Nasdaq is coming down, Tesla is coming down. But you can notice Tesla almost predicts a movement up in the Nasdaq. This is how you use different charts to intercorrelate and interconnect. If we're seeing weakness in Tesla, we're probably seeing weakness in the major indice, in this case the Nasdaq. And the Nasdaq just doesn't depend on itself as well. It depends on yields, it depends on other major indices, it depends on the DXY. You would have heard many times the professionals stack probabilities. Here we're just stacking two, Tesla and the Nasdaq. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. Rule 446 from the masterclass is incredibly important. All markets and therefore charts are intercorrelated and interdependent. You can see very, very quickly that the Nasdaq and Tesla are intercorrelated. Professional investors and traders know that they must look at yields. Why do you look at yields? Because yields represent interest rates. Who cares about interest rates? Businesses care. You care very much. The US 2-year yield, you can look at it as the benchmark for short-term borrowing. If money is becoming more and more expensive, when it comes to financial analysis, discounted cash flows become less and less valuable. That impacts market capitalization. Therefore, corporate valuations go down when yields go up. You can also think about it a slightly different way from a fundamental analysis perspective. When companies get less and less free cash flow, they have less money to put back into their businesses or buy back their shares. What could reduce free cash flow? You've got it, debt servicing payments. The first thing professionals do, they must know where structural support and structural resistance levels are. We can see on the US 2-year yield, around 5% was a gravitational support level. And what did we see? If it's not going below, it's going above. And we challenged that 5.062% level and also the 5.075 level. It couldn't hold it because this is what these resistance levels represent. They represent sellers coming down, and negative price momentum typically follows. What you will see here are the yields were gravitationally attracted to that 5.062% level and are making their way up over the 5.075% level. They closed out in the past trading session at 5.08%. Now, what does this mean for Tesla? Well, you can see that when you have big spikes in yields, this means the economy is uncertain. Big spikes in yields aren't often favored by stocks, and also FOREX and also crypto, not to mention commodities. But one thing is now occurring inside the economic system. There's a lot of renewed optimism and hope for economic growth. So in this case, yields can increase and stock market values can also increase. The value of risk-on assets can also increase. Now let's overlay Tesla and see what we see. If we do a helicopter view, what we can see is Tesla is increasing as yields are increasing. This is a very, very interesting factor, and you can also see when yields spiked up, Tesla didn't like that very much, but it very, very quickly recovered. Now we're starting to stack more and more probabilities. If we get a big surge in the US 2-year yield, that could dampen Tesla's price, but you can see this association that's occurring at the moment. It could be very short term, but if yields just gradually come up, there's nothing to say that Tesla won't go up with it. No matter what asset class you're investing or trading in, please look at the DXY. It's utterly critical to understand. Inside financial markets, everything is about support and resistance levels, and we know with the CTKS method we've marked up the DXY since 1967. Popping on the indicator, what do we see? Look at this confluence of smart money buy levels. Wow, it's a town meeting down there. We call that concrete floor, because it literally is. If the DXY comes down, it has so much smart money support underneath it, it could be very shortly lived. If you're new to trading and investing, you may say something like, well, Ken, so what? What does the DXY really do? If the DXY rallies, it puts pressure on risk-on assets such as Tesla. It also puts a lot of pressure on commodities and crypto. One thing to notice here, what we have between this 104.02 level and up here where we're getting smart money sell resistance at the 104.50 level and above, this is called a fresh air gap. When you get to fresh air gaps, price can move up very, very quickly, especially if there's a lot of underpinning support. This is why a lot of people get caught on the wrong side of the trade, because they are not aware that a fresh air gap exists and price can move exponentially inside an area where there's no smart money resistance. What have we seen here? This 104.50 area is quite strong. The DXY didn't get up there. In fact, it's been pushed down, but it's got so much underpinning support that may be very, very shortly lived. This is our stacking of probabilities, and it does take a bit of time to get used to this, but you'll get there. When people first enter financial markets, they think that there's one level of support and one level of resistance. This is clearly untrue. It's never been true. Smart money knows that is not the case. Retail does not. Counterintuitively, there's many levels of smart money buy areas and many levels of smart money resistance. There's not just one support and not just one resistance. When you can see all the different levels of support and resistance, it's called structural support and structural resistance. First, we'll look at the US 2-year yield and see how it's matching the DXY. We can see US 2-year yield came back to approximately this area. Now, if we look at the DXY, it's a little bit weaker than the US 2-year yield, and you can see that it's not recovered to the same extent. That is, there is a slight weakness in the DXY at the moment, but we know where smart money is buying and selling, and we know there's a ton of structural support below the DXY's current price at 104.18. When we look at Tesla, we can see something very, very different. Of course, Tesla stopped trading when the market closed. The markets are not open 24 hours a day, 7 days a week, not like crypto. The nice thing to understand, FOREX is open 24 hours a day, 5 days a week. What can we see here from a stacking of probabilities? If the DXY structural support kicks in and we see that fresh air gap start to get filled, the dollar could rally, Tesla could come down. This is how we stack probabilities. One thing that we look at as professionals, we don't care about anything other than reality. We don't form a story inside our head saying Tesla must go up because we're investing or trading in it. As a professional, you know that you control the trade or investment, but the market controls the return. There are many things that can push the markets around, external events that can just create systemic or system-wide shocks. Therefore, what we always do is daily three-dimensional risk management. If we're going long at spot, which is definitely the way to go, we just say it doesn't necessarily mean that whatever we hold will go up. We think about the down case first, the neutral case, and the up case. We're always thinking about what could happen, not only to the market in the next 24 hours, but to our portfolio. And we know that the market is simply a synchronization device. If you're synchronized in, you will get paid, but if you're desynchronized, you'll pay the market. We've looked at the Nasdaq, also looking at the S&P 500, marked up here since 1871 by the CTKS method. Let's turn on the CTKS indicator that shows us market structure. What we can see is market structure is all the safety nets and the ceilings inside price structure. It's not as retail investors and traders believe it. There are multiple levels of structure inside every price chart. And what do we notice here? This very strong smart money support level in the S&P 500 at 43.72 caught price. There was another safety net below it at 43.56. You can see if it's not going above or not going below, it's going above. It goes above this one, it's going to the next one. If it can't make it, it's going to the one below. But if it doesn't come back all the way to the one below, guess what? It's going above. And if it slices through it, it's going to the next one. You can see that we've had a lot of structural resistance at this 44.20 mark. We're trying to get on the S&P 500 through this structural resistance level at 44.12, but failing. We're not getting there. If we can't go above, where are we going? We're going below. 43.92 could well be on the cards. And when we think about the DXY and the yields, we know that the US 2-year yield is currently going up, and it's looking quite strong. If yields spike, the DXY finds support, we would imagine that the S&P 500 will come back to this particular smart money buy area around that 43.93 level. If it doesn't hold, there's another safety net below at 43.72. You can think that if you looked at charts like most people look at them, just like this, they don't look at the structure and they say, I don't really know where the structure is, so I'll just draw it up for the past 50 or 100 days. The S&P 500 has been around since 1871, and smart money knows structure. Retail doesn't. It's all about support and resistance inside market structure, and we know there's a lot of resistance up here from the 44.12 mark up to that 44.27 area. If we don't go above, we're going below, and therefore we can figure out where price could go from a probabilistic stance. If it doesn't keep its support here at 43.92, it's going to the one below at 43.72. It makes trading and investing stress-free when you know where the safety nets and ceilings are, and there are multiple safety nets and multiple ceilings. Let's throw on Tesla's price action, and you can see that white line here. What we see is Tesla's trying to break above, but there's structural weakness in the S&P 500. We also know that there's structural strength in the DXY. There is also structural strength in the US 2-year yield. All of this points to a picture where the probability of Tesla coming down in the short term is greater than it going up. Now, does this mean that Tesla can't go up? Of course it can go up. It depends on what happens in the intervening period of time. That's why you must keep your eye on the DXY. It's very important. And because it trades 24 hours a day, 5 days a week, it can give you some indication as to what yields could be doing. All investors and traders know that you must buy at support and sell at resistance, but you don't necessarily have to buy at the immediate support, and you don't have to necessarily sell at the next resistance. You use your strategy to do what you feel is best for you, but you must know where they are. Professionals always understand CTKS structure. They understand that the Tier 1 charts, these particular ones here, are the engine of financial markets globally. They see that the Tier 2 charts are incredibly important as well. If you would like to know where smart money is buying and selling, there are 27 indicators available through the ctksmethod.org website, and you can use a free version of TradingView to pop them on and overlay onto your charts. And for those members new to the service, you just go into 00 Member Chat Indicators Benefits and go into Section 2. Please make sure you read all the sections in 00. Rule 446 of the Masterclass is incredibly important. All markets are intercorrelated and interdependent. It takes time, effort, and energy to mark up charts with the CTKS method, but you're putting your hard-earned money on the line, so you should at least know where the lines are. One thing that we know, Tesla will open in about 12 to 13 hours from now. We must keep our eye on the DXY. The DXY will bleed in to the US 2-year, the US 10-year yields. That will help us to understand what structure will play out on the major indices. The process of intercorrelating and interconnecting charts is the most valuable process that you will ever learn inside financial markets. Please let me know in the comments, where do you think Tesla is heading when the market opens? Or when the market closes next? Up or down or just sideways? One critical thing to observe is the DXY. The DXY and Bitcoin currently have quite an inverted relationship with each other. I'll show you how. When I invert the DXY, you can see it's a fairly good indicator of Bitcoin's price momentum. And not only that, you know that the DXY impacts stocks, major indices, and also commodities. And of course, Forex. Unfortunately, the DXY only trades 24 hours, 5 days a week, so it's going to get these flat lines or closures. But Bitcoin trades 24 hours a day, 7 days a week, so you're not going to see that. Right at the moment, we can see, and this is uninverted, you can see when the DXY spikes down, Bitcoin loves it and risk-on assets love it. But when the DXY starts to rally up, it's not so good for risk-on assets. We will need to pay very close attention to what is happening inside the DXY. As all charts are intercorrelated and interconnected, those intercorrelations and interconnections actually show out in their structural support and resistance lines. We can see that there was a structural resistance line right here at 26,294, and you can see how price literally tapped it, got rejected, and came down to the next smart money support at 25,760. It's so important to know where structure exists, and these structural levels are formed through the CTKS method, which you can learn for yourself. What we know is Bitcoin is currently $26,082. It's hovering between these structural lines between 26,294 and 25,763. So, what do you think will happen? Do you believe that the DXY will rally? If you do, that is also saying that coming down to that 25,760 area is on the cards. If you believe that the DXY will crumble, will reverse course, that is saying, that's the same as saying that we expect Bitcoin to go up and challenge that 26,296 level and then the 26,567 level. It's very important to keep your eye on cross correlation. It just lifts the veil on everything. It makes everything understandable, but you must get the most accurate CTKS lines that you can possibly get. Please let me know in the comments, where do you think Bitcoin's price is going to next? Always remember CTKS structure overrides. What does that mean? These structural sell levels and buy levels actually contain price, and we see it all the time. If it's not going above, where's it going? It's going below. This is a very powerful way to look at all of the charts that you view to either trade or invest. When people enter financial markets, they enter Zone 1 and Zone 2. These are high-stress zones where people are addicted to certainty. Unfortunately, you can only stack probabilities and have a lot of rules. When you understand this, you can move into Zone 3 and Zone 4. Zone 4, the mastery of fear, is very important. Your financial returns are inversely proportional to fear. Inside Zone 1 and Zone 2, it's all fear, it's all panic, it's all blame, it's all anger. Negative emotional states will decimate your trading and investing accounts. Therefore, what we do is to get very scientific inside Zone 3 and Zone 4. We stack probabilities, but we also do something called positive excellence. As you pile on the years as you go through life, you realize that it's not what you get that actually matters, it's who you become. Negative excellence behaviors repel money, they repel wealth, and they repel happiness. Positive excellence behaviors do the exact opposite. They attract wealth, happiness, meaning, and fulfillment. Inside financial markets, Zone 1 and Zone 2 are full of negative excellence behaviors, and Zone 3 and Zone 4 are full of positive excellence behaviors. The way to bridge between Zone 1 and Zone 2, where just people lose money, and everybody goes through this process. If you feel like you identify with Zone 1 and Zone 2, don't worry about it at all, because it's just something that we all go through. Zone 3 and Zone 4 is where you get to keep what you earn. You lose the anxiety and the stress. If the markets are stressful, you're somehow stuck in either Zone 1 or Zone 2. To get to Zone 3 and Zone 4, you must know where the CTKS structure is inside different charts, and you must learn how to interconnect and intercorrelate it. Trading and investing is incredibly emotional. The key is to get out of Zone 1 and Zone 2 just as fast as humanly possible. Get into Zone 3 and Zone 4 as quickly as you can. A lot of people say they're investors because they simply don't know where and how to sell. The key is you sell at levels of high density structure and you buy at levels of high density CTKS structure. Professionals know it's not about being right or wrong, it's all about learning and forming your own rules. Gaining the knowledge is incredibly important. If you don't know what you're doing, it's very hard to be successful at anything. I just showed you the structure of the CTKS Masterclass, and Perperatum has very kindly offered a CTKS Partial Masterclass Scholarship. If you would like to learn how financial markets work, if you would like to learn the CTKS method, you can apply for the Perperatum Partial Masterclass Scholarship. The link is in the description of this video. Bull markets or bear markets, they just don't matter. What matters is structure. The CTKS Creed is a powerful way to keep your mind positive, to keep you inside Zone 3 and Zone 4. I believe the most important parts of this creed: I am dedicated and committed. I win or learn and never blame. That's a positive affirmation statement that you can say to yourself. Just say it over and over and over. It's so incredibly important. You either win or learn in life. There is no loss. There's no falling down without getting back up again. Even though at times things may seem really, really dark, there is always a way through. Solving our problems with positive excellence is the way. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.